Now, Kenya has a demand for climate-friendly bonds amounting to over 85 billion shillings in the next 5 to 10 years. The newly released research indicates this. Here to tell us more is KBA Director of Corporate Affairs, Nuru Mugambi. Thank you so much for joining us.
Thank you for having me.
So let's just begin because, as our Twitter poll question is today, there are people out there who don't really know what the Green Bond Program is about. So just break it down for us.
Okay, so the Green Bond Program is a partnership between Kenya Bankers Association, Nairobi Securities Exchange, an organization called Climate Bonds Initiative, which is a global thought leader in terms of making sure that the economic system is aligned to climate change.
Okay.
And then we also have Financial Sector Deepening Kenya and FMO. FMO is the Dutch Development Bank. So the partners came together to develop this program because we saw that if you look at the global green bond market, it's hundreds of billions worth of capital that is looking for green assets. And these are assets that basically create value for the environment while delivering financial returns. And when we saw the allocation of this capital in Africa, only 4% of the global green bond market we're benefiting from that. So we feel that it's important for Kenya to leverage the amount of capital that's looking for green assets. If you look at the fact that Kenya has about 70% of our energy mix is renewable energy, that means there's a lot of appetite for green investments in the energy sector. If you look at the fact that our agri sector contributes so much to our economic development, it creates employment for over 50% of Kenyans, you realize that we need to make sure that the agriculture sector is not vulnerable to climate change. So when you see extreme drought, when you see extreme flooding, that affects the productivity of that sector. So how do we bring in investment, both domestic and international, to make sure we climate-proof our key economic sectors? And that's really what we're trying to achieve.
Okay, fantastic. That definitely sounds very important, clearly, for the economy as well as our carbon footprint and the kind of impact that we're having on the climate. So, your study did reveal that manufacturing, transport and agriculture combined green investment and finance opportunities worth over this 85 billion shillings to be used in the next decade or so. And also, as you say, combined GDP of almost 50%. So what unique developments in each of these is spurring this opportunity?
So what we did is we brought on board another partner, WWF. They actually funded this particular study. They've done work in the blue economy, looking at the economic opportunities in the blue economy. But very little has been done in terms of understanding in Kenya what is the demand from the private sector for capital that's green. So we chose the three sectors, as you mentioned, transport, agri and manufacturing, because there was not a lot of research on that. I think a lot of work has been done in the energy sector, looking at the green opportunity in energy. And we felt that let's look at the three because they drive the majority of the GDP output. And then obviously two of those sectors are big four agenda sectors, agri and manufacturing.
Yes.
And what we found in terms of what you're asking, the exciting opportunities within transport, the BRT, the bus rapid transit investments that Nairobi and Mombasa counties are looking at, those are some key investments that we need to look at. Light rail, not only in the urban centers, but connecting peri-urban centers to urban centers. Those are some exciting investments. But then if you look in the agri sector, there are more micro, smaller investments that are required to help the participants in these sectors scale up. So if you look at how our agri sector is structured, the majority of the output comes from the smallholder farmers. And with them, there's a lot of risk and it's very complicated to really penetrate and scale up this market. So it's simple things as helping create aggregation models where you bring together many smallholder farmers so they can reach not only local value chains, but regional value chains. Of course, we've just signed the Africa Free Trade Agreement. So how can we make our local farmers reach Malawi, reach Gabon, reach Ivory Coast with their products, and also the global value chain? So we're looking at that. Some of the things they experience is their produce loses value just because of the transport problem, or because of maybe extreme heat, their produce loses quality. So how do you invest in simple things like cooling systems, transport systems, packaging to increase value for the product. So those are some of the investment opportunities.
Okay, that's definitely quite a wide area of things then. But you did mention the BRT, the bus rapid transport, particularly in Nairobi and Mombasa, and the projection is that it can raise up to 36 billion shillings and reduce, of course, the need for private cars owners. So you're reducing the traffic congestion as well and things like that. And it was supposed to have been in place by now, I believe, in Nairobi, but it's currently in limbo as the buses are not yet to be deployed. So what's going on there?
I'll let the government respond to that one. I'm not quite sure what's going on there, but I think as citizens, as policymakers, investors, we need to support what the government is trying to do.
But when you talk about, its role in the Green Bond program, how do you think, where do you think we need to particularly pay attention, or the government needs to in order to get this moving?
The BRT definitely, and the light rail is important in terms of where this inventory is, where it's stuck. We're not able to speak to that, but what we tried to do was quantify the demand for this capital, and BRT came out as the most capital intensive, also the most complicated because of these issues around policy and deploying the capital through the government infrastructure. Light rail as well came out as the second area where there's a need for capital.
Okay, great. We'll move forward now. Sure. Of course, the country is preparing for the first sovereign green bond issue next year. So to assure that the country's sustainable economic developments and, the resilience in line with green economy strategy and climate change policies. So what are the greatest barriers that the report has indicated to this particular hope?
So in terms of the issuance of the sovereign green bond, Kenya would be the second country in Africa to issue a sovereign green bond. So Nigeria unfortunately beat us to it. They issued a demonstration green bond. A lot of countries do that. They issue a demonstration bond, then they scale up. But the team at Treasury has been very committed. They've spent a lot of time consulting with the county governments, the municipalities, and just looking at, and the parastatals, and just looking at where they can, once the capital is raised, where they can deploy it. They have yet to pronounce the quantum, but if you look at, there's a policy document called the Kenya Green Economy Strategy. Okay. In short, it's called GESIP. If you look at the GESIP, it requires 2.4 trillion shillings worth of capital for green activity. So the most the government can raise is 2.4 trillion because there are projects that are identified in that GESIP plan. But in terms of what they will probably try to raise in the first tranche, we're still hopeful to see what the number is. The challenges we're faced are numerous. Identifying the assets is one of them, which is why this study that we did with WWF is important. You need to know, once you've raised the capital, how are you going to deploy it? How quickly can it be taken up? Because there's this issue called cost of carry. If you raise the money and you don't deploy it, there's a cost that you're incurring holding onto that capital. So it's very important to have that pipeline ready to absorb the capital that's raised. So I think that's the number one challenge probably Treasury is trying to sort out. In terms of the study, we found other challenges like this issue of political goodwill. There's so many examples of projects that have stalled, probably because they didn't get the necessary attention within the government, they didn't get the necessary buy-in or de-risking support that the private sector would like to see the government bring in. There's also a challenge of capacity. A lot of the investments require technology advancements, reconfiguring how you do things. So when you talk about smart agriculture, our farmers need to be equipped to look at how to deploy drip irrigation, to bring in fertilizer that does not create a lot of nitrous oxide, for example. So I think capacity challenges was one, and the final is capital. And it seems odd because you say there's a global green bond market that's hundreds of billions of dollars. Capital shouldn't be a problem, but it is because the money is there, but you need to give investors the confidence to bring the capital to you, and which is why partnerships are important, such as the Green Bond Program.
Okay, thank you so much, Noor, for joining us today and for talking about various things that the Green Bond Program touches on and hopefully is going to keep on developing.
Sure. Thank you.
All right. Well, that was Noor Mugambi, the Director of Corporate Affairs at KBA, talking about the Green Bond Program with us this afternoon. On that note, we're going to take a short commercial break, but we'll be right back on Business Today.